Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now the data is in, and to me, it has never been as clear as it is right now that our housing market and our economy in whole is so politically motivated that all of these political pressures are going into our market. And essentially what that's doing is causing our markets to have absolutely no financial and economic fundamentals. And essentially, because of the lack of fundamentals and the excessive political pressures, that is going to cause, in my opinion, our housing market to start correcting negative equity loss, negative equity growth, or crash. Now, here's the thing, that's not necessarily bad news, even if you're a homeowner, so long as you're prepared. Because think about it, if you're a homeowner and you're prepared, if the housing market crashed, guess what you get? Yes, you lose equity, but you get generally lower property taxes. So it's not all bad. But the thing is, it's going to be bad if you're not prepared. If you're prepared, if you have a plan, if you stay driven, if you work on your credit, your income, your assets, what I am telling y'all is you're going to be winners along with me when this market flips. And here's the beautiful thing about it, you guys. I'm going to take you through that process with me. And I'm already having to back off buying houses, right? I'm not quite ready. I'm financially ready, but the market has not settled enough for me to be confident in purchasing one of the biggest, most important financial transactions of my life, which is purchasing a home. So what we're really going to do today is we're going to look at the rates and what's going on with the rates, because the way I look at what's going on with the rates right now is total political control. A lot of people thought that the rates went down. Even my subscriber, and Jeff, this is to you. You already know this talk was coming, Jeff. The reason I want to talk to you guys about Jeff is I love him. If I didn't love him, I wouldn't talk about him. He was one of my original subscribers. He comments every single video. And Jeff is financially ready. He has his money down. He has good credit. He has solid income. And with what happened last week, as far as when the national average interest rates went down and the 10-year went down, my boy, my man, someone that I love, Jeff M. If you guys see Jeff M in my comments, I want you guys to encourage him. But my own dude, my own boy, my subscriber, he went out and he put in an all cash offer on a home. Now, thank God he lost that bid. And the reason I say thank God is you don't go back in the market just as soon as you see the first deal. The reason why people are going back into the market the soon as they see any change or stability in interest rates is the fear of missing out. The fear of missing out is still in the buyer's market. And this is what I'm telling you guys. Don't stay distracted by one set of data. If you guys see the interest rates go down or the 10-year goes down, realize that's just one thing. And also realize that it's not even down that much. It's still much, much, much higher than what it used to be. So really what I'm telling you guys is be careful, right? Be careful with your emotions. Come up with a plan. Stick to that plan. You guys will become a winner. And don't worry about the interest rates. Let me give you guys the data. Let me explain what's going on, okay? And then formulate an opinion from there. But today we're going to do a little bit of unpacking from Zillow from an article. It's very short. The name of the article is Mortgage Rates Continue Fall While Investors Price in Recession Risk. Now, remember, you guys, I am not your financial advisor, even if I want to be, and maybe I do, but I'm not. This is my personal YouTube channel, even though my bio is as a realtor, loan officer, instructor in all things real estate in Texas, husband, father, renter, victim of '08. Trying to find my primary residence. I own property. I have a rental right now. I have a note right now. I have been living all things real estate for the last 2 decades. And the reason for this channel, y'all, is quite frankly, primarily to help first-time home buyers. Quite frankly, I'm more afraid of first-time home buyers than anyone else. And Jeff, I don't even think you are a first-time home buyer, Jeff. I don't know why I'm so worried about you, but don't be going out putting in offers yet. Why would you do that when the dust isn't even settled yet? We don't even have a good idea of the marketplace, right? But I get it. It's the emotion. It's the fear of missing out. And what I'm trying to tell you guys and scream to you right now is check yourself before you wreck yourself. Pretty simple, right? But regardless, you guys, let's jump into this article from Zillow. Let's see what Zillow has to say this week about interest rates and the trajectory of the housing market. Take a look. So it's a very, very brief article, and I wanted to keep it brief, y'all, because I'm getting sick and tired of reading. And I'm not good at reading. You guys can tell that. The editing is such a nightmare. But anyways, here we go. Mortgage rates continue to move lower last week. While mortgage rates are still significantly higher than the beginning of this year, they have declined over 0.5% from the highs in mid-June that were over 6%. Economic indicators last week pointed to a slowing growth and continuing increases in initial job loss claims. Competition among buyers is easing in the housing market as affordability challenges mount, and builder confidence is eroding. While labor markets are still tight and inflation readings high, investors are pricing more risk of recession into medium to long-term interest rates, believing the Fed will have to pivot away from further rate hikes in the future. This is helping reduce long-term interest rates and drive equity prices up from lows seen earlier this year. The Federal Reserve raised the target federal funds rate today, another 0.75%, in line with market expectation. Investors will be analyzing comments from the Fed this week for any indicators of more hawkish or dovish language that could impact interest rates expectations. Key economic data releases on GDP and personal consumption expenditures later this week will provide further readings on economic activity and inflation pressures that could influence market views going forward. What does all of that mean? Essentially, what it means is we have no idea what the Federal Reserve is going to say, and based on what they say is going to drastically change our markets, okay? And I hope you guys have been seeing that the power of the Fed is absolutely remarkable. And remember this, and I really want to go into the interest rates, why the interest rates are going to continue to go up, and why essentially you shouldn't buy right now. So starting with the interest rates, here's the thing, you guys, we have 40-year runaway high inflation at 9.1% right now. We haven't even peaked. The last time we had inflation this high was in the 70s and 80s. In the 70s and 80s, the only option the Federal Reserve had to combat that inflation was raising the interest rates, I believe, for that entire decade into double digits. So what on earth would make you think that the Federal Reserve will be able to combat inflation by barely raising interest rates? Y'all, in other words, be careful on holding on to certain things that you believe are trends, which in our reality are not trends. The Federal Reserve is going to increase the federal funds rate. Now, I understand that the federal funds rate is not residential mortgage rates. However, the federal funds rate is going to affect everything. Now, what I'm watching as far as an indicator on what direction the residential mortgage rates are going is the 10-year treasury. And right now it just went up. Right before I did this video, I looked at the 10 years over 2.7 right now. So again, what I have been saying, for the past few weeks is more than likely interest rates are going to go up and down and up and down and up and down. Now, I suspected that they would skyrocket in conjunction with the federal funds rate going up because that has been the trend. That didn't happen. But make no mistake, even if the 10-year stays low at about 2.7, remember the Federal Reserve can still sell mortgage-backed securities, right? They're no longer purchasing. In other words, you guys, the Federal Reserve has so many different ways to raise interest rates. It's really hard to know when they're going to raise it, what they're going to raise it to, because quite frankly, we can't trust them. We already know we cannot trust them to properly warn us. We've been whiplashed, we've been rug pulled, and that's probably going to continue to happen because it's politically motivated, right? This is all politically motivated. And let me explain as well why, in my opinion, despite what there's so many YouTubers saying, Dave Ramsey, there's so many people saying it's still the best time to buy. There's so many people still saying that house prices have never gone down except for one time in the last 100 years. There's still so many people saying that. Now, here's what I'm saying. I'm not saying to permanently step out of the housing market. I'm only saying tread lightly, be cautious, and if possible, and I'm actually kind of begging you here, sit out. Just sit out until 2023. That's all I'm asking you. Please, for the love of God, sit out at least until 2023. And I believe that by doing that, it's going to give you guys a better option to purchase something and to purchase a home of your dreams. And we really don't have to worry about interest rates. But when we have situations like we have right now, when the interest rates are trending downward, that's generally a good time to lock your interest rate. So in my eyes, I said last week people should lock their interest rates. Now they're starting to go up. Probably now that they've trajected downwards so much, it's probably going to traject back upwards because why? Runaway inflation. Don't forget that. Now, as far as values are going to go down. And let me explain why values are going to go down in houses. First of all, they have to, because the house market was artificially created, breaking all economic and market fundamentals. Okay. But the runaway inflation is still here. And the reason why not only houses, cars, jewelry, they're all going to go down is people are struggling just to afford to live. If people are struggling just to afford to live, there's going to be less people buying cars, jewelry, and houses. Once these houses continue to sit stagnant on the market, I'm telling you, I already know what's going to happen. The same thing that always happens. Prices will continue to go down. And that's why I'm saying, you guys, we have data now. We have trends now. We have patterns now. They're generally all going the same direction. So let it play its course out despite what interest rates go to. In fact, the higher the interest rates, and a lot of people that are uneducated in how real estate works don't understand when I say this, but the higher the interest rate, the better it is for us, because the higher the rate, the more pressure it puts on values going down. There's so many people that say that interest rates don't affect home values and there's no data and there's no statistics on that, but it absolutely does. And here's why: affordability. Interest rates have a direct correlation with affordability. If people can't afford houses, they're going to stop buying. Case in point, what's happening right now. Do I need to even say any more, y'all? But anyways, you guys, I want to end this with this. I want anyone that's discouraged right now to make a plan. Start saving double the amount of money. Start getting out of your consumer debt, or make sure your utilization ratios that are only on credit cards is 30% or under. That will give you a drastic increase in FICO score. Also, get another job. If you don't have 4 kids like I have 4 kids, you better get a job, because I have 4 kids and I have 3 jobs, right? But I work like crazy, y'all. And the reason I'm working like crazy is I'm sacrificing right now to win in the future. And I want you guys to do that with me, because I am this close to being ready to buy. Okay. I'm not going to buy yet. I'm not saying to buy yet, but I'm this close, and I'm finally starting to find homes that I would actually buy right now if I didn't know where we were headed, which is a downward trajectory. Again, watch the data if you don't want to listen to my opinion. Other than that, you guys, I really appreciate you watching this video with me. And if you're out there investing in real estate, you know, I wish you luck, and I hope you win.